actually happen? How did we go from being over here on the NASDAQ to dropping right down to 13,847? And the same thing actually happened on Bitcoin. We went from 38,000 or somewhere around 38,000 and bang, there we were, back to 36,500 or 36,000. So today we're going to look at exactly what happened yesterday at the Fed meeting, how things played out. Then we're going to talk about what you need to do now, because it looks like the market may be going sideways, waiting for a new narrative or waiting for something to happen. And it's not only the crypto markets, but also the traditional markets. Now, we are lucky that in crypto, even when we get these sideways markets, we can still make 200, 300, 400%. And that's what we're going to be talking about today. We're going to be talking about the best strategies that you can deploy in this sideways market to make life-changing money, even in a sideways market. So it's going to be a big show. Let's get the show on the road.
Get the fuck out of bed, bitch, go. Get up, and then they got go. Time to wake up, bitch, get up. Get up. Get up.
Yo, welcome back, Banter fam. I'm Crypto Man Run. I'm here twice a day, every single day. We're bringing you now 3 shows every single day. I'm bringing you this show. There was Sheldon doing the charts earlier, and later on we got Hustle bringing you play to earn alpha gaming. Now, let me tell you, what's happening right now in the play to earn gaming sector is unbelievable. In fact, when the whole market's moving sideways, there are some narratives that are killing it, and play to earn is one of those narratives that are killing it. So if you're not watching Hustle show, it is the best crypto gaming show in the world. And I'm not just saying that because it's on Banter. It's huge. Subscribe to our channel, watch this show, like this content, let everybody else know that we're here. Remember, when you subscribe, you are joining the family. And when you are part of the family, you're joining everything that happens with this family. Giveaways, the Banter bags, which we're giving away when we get to 700,000 subscribers. And there's so many more amazing things that happen when you guys are part of the family. Let's talk about what happened yesterday, because we went into this Fed meeting. Actually, in fact, before we talk about that, guys, we need your help. We are hiring, and we are hiring aggressively. And right now, we're looking for people, specifically people living in Cape Town, or people who are willing to relocate to Cape Town. We're looking for people to help us create content. So if you're a real crypto degen, and you spend your life on Twitter, and you're an expert in identifying narratives and stuff like that, then we want you to come and join us. So there's really not much more that you need. If you're one of those people that spends their life on Twitter, looks for narratives, is a full-on degen, if you've got some experience in writing, that would be amazing. But what we're looking for people to join us here in Cape Town to help us create these shows, to help us research the tokens, to help us create the narratives and ride the narrative. So if you want to join the Banter fam, it's a full-time position. You've got to be in Cape Town or willing to relocate to Cape Town almost immediately. Then send us a one-pager CV, or send us anything to do with your crypto-related experience to jobs@cryptobanter.com. Make sure that you've been in crypto for at least 2 years. We need people who know the crypto market, because we are expanding our programming. We've got an amazing new show that's actually starting. So we are expanding our programming. It's going to be absolutely insane. Also, before we get into the big story of the day, remember that I was supposed to give away 50,000 BitDAO tokens last year, and I didn't give them away. I gave away like 10,000 of the BitDAO tokens, and I didn't give away the rest of the BitDAO tokens. And one of the viewers actually alerted me and reminded me that, you haven't given away all the BitDAO tokens. So we're going to start that giveaway again. It's a very simple giveaway. There is a description link below for opening an account on Bybit. You open an account on Bybit, you fund the account. I don't care if you fund it with $100 or $200. I couldn't give a shit. Every day we will get a list of all the funded accounts, and I have to give away the 50,000 BitDAO tokens. I'm sorry, I made a mistake. There was so much going on with the Banter bags, but I'm going to make it up to you guys. I'm going to give you guys $100,000 in BitDAO tokens, or 100,000 BitDAO tokens. Because I did make a mistake. It was a mistake. It was an honest mistake. There was just so much going on with all the giveaways. So if you don't have a Bybit account, open an account, fund it. I don't care if you fund it with $50, $100, just fund it. Every day I'll get a list. I'll make sure that I give away the 100,000 BitDAO tokens in the next week or two, just because we need to do it. We said we were going to do it, and we will do it. So that's that. Also, yes, we need those crypto degens. If you are a crypto degen, join us. Let's get the show on the road. All right. So yesterday we went into this Fed meeting. It was the biggest meeting that the Fed, or we said certainly for crypto, the biggest meeting that the Fed was having in a long time, because it was the meeting where the Fed was going to tell us their course on interest rates and on when they were going to start reducing their balance sheet. And we went into this meeting with expectations. So we had like a whole lot of expectations. The expectations were pretty much that the Fed was going to acknowledge the nerves in the market. We expected no rate hike in January. We didn't expect them to hike rates yesterday. We did expect them to start hiking interest rates in March. We said, so he'll mention inflation, no interest rate hikes now, interest rate hikes towards the end of the first quarter, and then tapering of the balance sheet sometime later in the year. So what we expected was, that Powell will stop putting money into the economy in March and actually start taking money out of the economy later in the year, sometime later in the year. And you know what? We got actually exactly what we predicted. So if that's the case, then why did the market respond like they responded? Why did the markets go from here, which was about 14,661 in the NASDAQ, all the way down to 13,869? And where the shit started to hit the fan was here at this yellow little marker that I've put over here. I actually took the timestamp and I marked the timestamp. So let's take a look at how the events played out last night. And basically, let's take a look at how the Fed fucked us. Yeah, that's basically what it is. You know what? I'm going to do something that I probably shouldn't do, but I'm going to do this. I shouldn't do this, but I'm going to do it. I'm going to do it because I feel like having some fun today. So we were talking about how hold on, I have to hold on a second. I'm going to do this. Okay. Guys, should I do this? Are we going to get banned?
Do it.
Do it. Must I do it? Or are we going to get banned?
Probably. Do it.
Okay, I'm going to do it. So, I mean, if you think that we got screwed pretty hard, you should see how some other people got screwed. And in particular, I saw this post from Pornhub, which said a rich MILF gambles all her money on unprofitable growth stocks, gets pounded hard by the Fed. So I don't know if you think.
That is so savage.
So now let's get back to serious business. I didn't make the meme. I just saw the meme. Okay, I didn't make the meme. I just saw it. I just saw the meme. I didn't make the meme. And Fred sent it to me. So if you want to blame anybody, if you want to blame anybody, well, you can blame Fred. Okay, guys, let's get back to serious business. So we said that we had certain expectations, and we got those expectations. Exactly what we expected, the Fed actually did. And the Fed statement actually started pretty much exactly as we anticipated. And what they do usually is they issue a statement. And in the statement was exactly what we said. They said, look, we know there was a sharp rise in COVID. Job gains have been solid in the last couple of months. And if you continue to go down, they say, in support of these goals, the committee decided to keep the target range for federal funds rate at 0 to 0.25%. With inflation at 2%, the committee expects it will soon be appropriate to raise the target range. In other words, soon we will start increasing the interest rates. And the statement actually said exactly what we thought would happen. It said the committee will increase its treasury holdings by at least 20 billion per month until March, and then in March they would start. And in March they would stop putting money into the economy. So that's pretty much exactly what we expected. And then Powell came on and he started talking, and it was exactly what we expected. Listen to this.
Good afternoon.
You can see I've been listening to things at 2 speed again. I wonder if I put it at 2 speed and you're listening to me at 2 speed, what happens?
We are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the Federal Open Market Committee kept its policy interest rate near zero and stated its expectation that an increase in this rate would soon be appropriate.
So far, so
The
good.
committee also agreed to continue reducing its net asset purchases on the schedule we announced in December, bringing them to an end in early March. As I will explain, against a backdrop of elevated inflation and a strong labor market, our policy has been adapting to the evolving economic environment, and it will continue to do so. Economic activity expanded at a robust pace last year, reflecting progress on vaccinations and the reopening of the economy. Fiscal and monetary policy support and the healthy financial positions of households and businesses. Indeed, the economy has shown great strength and resilience in the face of the ongoing pandemic. The recent sharp rise in COVID cases associated with the Omicron.
So everything was going exactly as we predicted, and the markets were responding exactly as we predicted. It was bullish. Everything was good. And then, you know what happened? I'll tell you what happened. We got Victoria Guidaed. Okay, now, do you know what Victoria Guidaed is? I also didn't know what Victoria Guidaed was, and I'll show you exactly what Victoria Guidaed means. So at the Fed's interest meetings, they allow journalists to ask questions. And this meeting was no different. They allowed the journalists to ask questions.
Implications for the appropriate pace of policy adjustments. Beyond that, we haven't made any decisions.
Thank you. Let's go to Victoria Guidaed.
So Victoria Guidaed asks a question.
Hi, Chair Powell. I wanted to ask, you were talking about the health of the labor market, and I'm curious whether you would characterize where we're at right now as maximum employment, and also along those same lines, obviously rate hikes on the table this year. Do you think that the Fed can raise rates, bring inflation under control without hurting jobs and wages?
So Victoria Guidaed asks this question, and everything's fine. And before that point, everyone's bullish. TED Talks Macro publishes a thing. He says takeaways from Powell's presser, entertaining rate hikes in each meeting in 2022. Asset prices are somewhat inflated. The data will guide March to see first rate hike, which is exactly what we thought. Inflation has worsened since last meeting, steadily moving away from unprecedented accommodative policies. Basically, everything was going according to plan. And then Victoria Guidaed asked her questions. And at about a minute into Powell's answer to a question, this is where it all went pear-shaped. This is where that little circle is on the chart. You see, so let me zoom in for you guys. This is exactly the point where Powell starts answering Victoria Guidaed's question.
Many millions of more job openings than there are unemployed people. So you ask whether we can raise rates and move to less accommodative and even tight financial conditions without hurting the labor market. I think there's quite a bit of room to raise interest rates without threatening the labor market. This is
bang. That's it. That one sentence, I'm going to play it for you again, because that one sentence.
Many millions of more job openings than there are unemployed people. So you ask whether we can raise rates and move to less
Here it comes.
accommodative and even tight financial conditions without hurting the labor market. I think there's quite a bit of room to raise interest rates without threatening the labor market. This is, by so many measures, a historically tight labor market.
That one sentence. There's quite a bit of room to be raising interest rates. That is the one sentence that took the whole market tumbling down. And we went from, on the NASDAQ, from over here, right here, to all the way down to here. And Bitcoin followed suit. So we were here, and then the Fed actually, let me get you guys onto a 4-hour chart. It makes it a lot easier to see. But we were over here. We were doing an amazing recovery. We're even getting close to 39,000. And then bang, there is quite a bit of space to take interest rates up. And there we go. We went all the way back down to 36,000. And now we're kind of recovering. Now we are kind of recovering. And I said that basically what I thought the market was doing was the market was actually having a taper tantrum, because the markets were now starting to worry about how aggressively the Fed were going to start raising interest rates. So we saw immediately that the market started to price a higher and more aggressive interest rate. Yesterday, we thought that there's going to be a 25% basis point hike in interest rates in March. Now the market is saying that there's a higher probability, a 16.3% probability, that the Fed is going to start raising rates, and they're going to go up by 50 basis points in the March meeting. That is what the market is worried about. So whereas the Fed statement was dovish, the response from Powell was quite hawkish. So whereas the Fed statement was accommodative and saying, look, we'll monitor growth and there's not a real problem, when Powell started talking and when we got Victoria Guidaed, that is when everything turned. And Powell then continued to get more and more hawkish, more and more aggressive around it. Now, everyone thinks that the Fed, by tightening or by increasing interest rates, is going to stop the economy and we're going to go into a bear market. But traditionally, that's not really the case. If you look at the last couple of periods where the Fed did tightening, look at number 2 over here, which is a period where the Fed did tightening, 2015 to 2018. That's the part when Bitcoin and the markets grew the most. And if you look at, again, the period of 2021, where we start tightening, the market or Bitcoin actually does perform. So it's not the end of the world. The issue is that the markets are now going to be looking for direction. And the next time that we're going to get any kind of direction from the Fed is in March, which means that we're going to continue to look for direction for at least until March. The traditional stock markets are going to continue looking for direction at least until sometime in March. And so we can expect the traditional markets to move sideways in the absence of any other catalyst until sometime in March. And if that's the case for Bitcoin, well, then we're going to need a serious catalyst in crypto if we're going to get if we're going to get any movement between now and March. And what people are worried about now is we're worried about the fact that we're going to get into a sideways market. I mean, the worst market is a sideways market. The worst market is a market where there's nothing happening on the market. We keep hovering at this 37, 38, 41, 42, back to 31, 32. That's a sideways market. And if you think about normal markets, for them, a sideways market is the worst, because in periods of volatility, you can make lots of money. But when there's no volatility, there's no money to be made. When there's no volatility, there's no money to be made in traditional markets. That is where crypto is different. And that's where I think we should be spending a lot of our time today. Because being in crypto, we have a gift. Even in markets that are moving sideways and maybe even going down, we still have opportunities to make huge amounts of money. 200%, 300%, 400%, 500%. So we can still do that in crypto, even in sideways markets. But what it does mean is that we have to change our strategy slightly, because our strategy up until now has been to buy the gems, to ride them to the top. But now the strategy needs to change slightly. Let me show you what I mean. So let me just get rid of all the other ones here. Someone just said he caught the start of the stream. I hope he missed that Pornhub joke. I mean, only in crypto, Charles Z says it's about staking. It's not about staking. We have NFTs. Even in a downward market, you've got NFTs in crypto, which can make a whole lot of money. So you've got NFTs in crypto. The search term for NFTs is now starting to grow parabolic. And the search term, it's actually beating the searches for crypto, which means that more people are more interested in NFTs right now. And if you look at the volume on OpenSea, Wednesday was the second highest day of OpenSea of all time. Wednesday was the second highest day of all time on NFTs in the middle of this, I don't know, dare you call it a bear market. So we have opportunities here in crypto that normal finance doesn't have. We can play to earn. We can buy NFTs. And that's why here at Banter, we really want to cater to all those needs. We want to make sure that you've got the technicals. We want to make sure that you've got the fundamentals. We got you. Hustle's got the In the Game show now. To me, Hustle is the smartest guy in gaming out there. He's the smartest gaming guy out there. Every single one of his shows is pure alpha. I've always said that his shows are the highest amount of alpha per minute. The highest amount of returns per minute come from Hustle show. Yeah. So we've got you that show. Soon, we're going to be introducing a DeFi show. I've got a surprise for you guys, but someone that you may know, may be joining the Banter fam and bringing you guys a DeFi show every single day. So here in crypto, we've got amazing opportunities to make money, huge money, thousands and thousands and thousands of percent return, even in a bear market or even in a sideways market. But we've got to change the strategy slightly. And when I say change the strategy slightly, what I mean is, while the markets are here and looking for direction, you got to make sure that you're following a very strict strategy. The first part of the strategy is you've got to have that buy list. And you've got to make sure that you're switching all your shit coins into quality coins. You got to be asking yourself, if this is an extended bear market, if this bear market goes on for a long period of time, will my tokens that I'm holding, will they make a bear market? And if the answer is no, you probably want to be switching those tokens into stronger tokens. The next part of it is to have a buying list and to dollar cost average into all the dips. So every time that you see a dip, like when Bitcoin went to 33,000, dollar cost average in. Just dollar cost average in. The third part of your strategy is to earn the maximum amount of yield that you can earn on every one of your tokens. So if you're holding ETH, stake your ETH. If you're holding Cardano, stake Cardano. If you're holding DOT, stake your DOT. Make sure that what you're doing is that you're maximizing your portfolios, because what happens then is you start earning more and more and more of the tokens that you love through these staking rewards. And by earning more and more and more of the tokens that you love, when you come out of the market, instead of having the number of tokens that you started with, you got a whole lot more tokens and the price of a token start moving up. So in this kind of market, instead of spending your time looking to buy tokens, spend your time, put on your farming hats and spend your time looking for ways to create more of the tokens that you like. Almost every single token that I know has some kind of earning strategy. And what you need to be doing is you need to be looking at the earning strategy that the tokens have and making sure that you are earning as many of the tokens that you can. Stake Cardano, earn Cardano. Stake Ethereum, earn Ethereum. Stake any other token and earn. Stake your Luna, get the airdrops and get yield on your Luna. Just keep earning more and more and more on your tokens. Go through your token list. And make sure that you're earning. And even if you think that it feels like you're not earning a lot, if you're earning 10% on your Phantom, but you're earning more Phantom, and Phantom goes from $2 to $4 or $5 or $6 in the bull market, then you've actually made a whole lot more money. So this period is actually a period where, while we're looking for direction, we just stake it till we make it. Exactly. This guy, he said, just stake it till you make it. Earn yield on your tokens. And then the last part of it is earn yield on your stablecoins. So not only should you be earning yield on your tokens that you love, but also on your USDT, on your USDC. If you're sitting in cash and you're waiting to deploy the cash, rather stake it and make sure that you're earning yield while you're staking it. And there's many ways that you can earn yield while you're doing it. And the best part of this whole thing is that you're doing it before the institutions come in. So I don't know if you remember that I said this to you, but I said that the institutions were going to come into DeFi. And in fact, Miles Deutscher, I think, said exactly the same thing. He said, the institutions are coming into DeFi. Did I say Miles Deutscher? Did I also say earlier that we may be introducing a DeFi show?
Yes.
Okay, maybe, possibly. So ARK gets it. I think that in the period where the traditional markets continue to move sideways, what's going to happen is we're going to see an institutional move to DeFi. we're going to see the institutions come in, and they're going to come into DeFi. And a couple of days ago, we wrote an article on the Crypto Banter website where we said, look, if you want to front run the institutions, what you need to do is you need to identify the tokens that the institutions are going to use to start earning yield. And we said like things like buying Anchor Protocol or buying Luna, because you know they're going to come in, they're going to buy Terra, they're going to stake their Terra to get 20% of yields. And when that happens, what's going to happen? Well, the price of Luna is going to go up. So what we said you should front run the institutions by buying Luna, because they're going to be coming for Terra, because they're going to want to earn the 20% yield. There are many other tokens like that. We said, look at things like buying Spool, because Spool is an institutional DeFi middleware, which allows people to create strategies. Now, that's going to become a pivotal or a very important part of the DeFi stack, because you're going to need to be able to deploy DeFi strategy pretty quickly. So that's another one that you can do. Another way that you can do it is, we said you can buy things like Donkey Finance. So you can buy Donkey Finance. You don't have to buy the token. You can just go to Donkey Finance and you can stake the token. And so what I thought I'd do today is I'd get Gil, who's the founder of Donkey Finance. Gil, how are you, my friend?
I'm good. It's great to be here. How are you?
It's good to be here. It's good to see you again. And this time you look much better. Like this time you look like you're ready for an interview.
I got a donkey behind me, a donkey next to me. I'm ready to go.
All right. So let's talk about this thesis of the market moving sideways and institutions. Well, not only institutions, funds, private investors, all coming into the market to look for yield, right?
Yeah, absolutely. I mean, I connect with that narrative very much, and I believe it's 100% true. The market moving sideways, like you said, the volatility gives those opportunities when you want to do those big swings. And when it's moving sideways, crypto gives us opportunities that the traditional markets simply do not have. One of them being staking, or AKA farming, which is the more aggressive way of staking. I see two opportunities here, and we're seeing it a lot also with our matrix as far as users coming in. So I see either the stablecoin farmers, people that decided to put some money into stable right now, wait for the market to calm down, and in the meantime, they want to make good yields on their stable. And here, there's no comparison compared to what you can do in crypto compared to the traditional financial world. A bad yield on stable crypto is anywhere between, let's say, 10 and 12% APY. That's a bad yield. And as we see new networks coming out and new networks deploying, you always see a surge of APY on those stable coins that can reach even 40 or 50% APY for a certain amount of time. And the second thing that we're seeing, which is very interesting, we're seeing people that see great opportunities to buy tokens that they believe in, right, at discount prices. And after they find themselves buying the dip, just like you said just a second ago, it's a game of accumulating more of those tokens, so that when the bear market, if this is a bear market, is finished, you come out of the game with more tokens. And the only thing I think is important to understand in regards to that is the impermanent loss factor. So you need to know to look for a strategy that most likely will have a lower APY, but 100% does not have impermanent loss, so that you are indeed accumulating more of those favorite tokens of yours.
Okay, so first of all, do you believe in the narrative that institutions are going to start looking for yields, because they're not going to get yields on the traditional markets, and they're going to take a small portion of the capital and start allocating it into DeFi? And we think here at Banter that that's a big theme for 2022. We think the first of the institutions are going to come in and start looking for DeFi yields, right?
Absolutely. And I mean, I can tell you from my own personal narrative regarding different institutions that have been approaching us recently, at this point, still only for an informative kind of approach to kind of get some more information and understand better how this world works. But obviously, these returns are appealing, especially to institutions, and they're looking for the combination, in my opinion, they're looking for the combination of the high DeFi returns, but also some level of security and confidence. In that regards, at Donkey Finance, we launched our first strategy that has insurance coverage together with Bright Union, which is like an aggregator for different insurance protocols. And the more we see insurance protocols evolve and become more sophisticated within the DeFi world, we're going to see more institutional money coming in as well.
Okay, so now when I look at the Donkey Finance side, you said that there were two kinds of strategies. One was the LP strategy, where you're subject to impermanent loss, and we'll talk about the impermanent loss in a second. And the other one was where there's no impermanent loss, because you're staking stable coins and there's no impermanent loss, right?
Correct, but it's not only, or it's not necessarily only for stable coins. For example, the cake strategies that you see in front of you as well have no impermanent loss. BNB, some strategies have, some don't. So if you go in there, you'll see, I think there's one currently that has no impermanent loss, which is obviously the lower APY, the BNB Bull, and the Rastafari has impermanent loss. That's why the APY is slightly higher. So, I mean, we're trying to simplify things, obviously, and we still have a lot to go as far as simplifying that for our users. But in the end, if you read the diagram in front of you, you'll see where there is or isn't impermanent loss. And that's, in my personal opinion, that's where users that don't want to think so much need to go. They just need to be bullish on a certain token, accumulated at discount prices, and be farming that specific token without impermanent loss. And there's another approach that you can say, you know, even if there is impermanent loss, I'm betting on a different ratio. Like I'm saying to myself, you know what, I think ETH is going to go up more than BNB. Therefore, this strategy fits me as well.
Okay, so give me an example. So if we let's look at an example with someone who's just got USDT or USDC, and he wants to make as much yield as possible on his USDT or USDC. Where does he go if he wants to go on Donkey?
My personal favorite, but that's literally it's my own personal narrative. In BUSD, there's Mediciv one. It's on the top right corner. Deposit with BUSD, and then right in front of you, Mediciv one. He's been. This is a farmer that's been extremely active, and that's what our platform is trying to build. It's trying to encourage farmers to be active and change their strategies all the time. So he relatively swaps his strategy a lot. And that's why he's able to maintain a steady APY. This is pure stable APY, 25%. And of course, if you have the Dawn incentive, you get that extra.
How do I get the Dawn incentive? So if I have USD and my USD is sitting on the side, I can give it to Mediciv one, or put on the Donkey platform, follow Mediciv one, and I can get 25% return. And that is plain 25% return. If I want to boost it, how do I boost the APY with Donkey?
So step number one, you buy some Dawn tokens. Step number two, you stake the Dawn tokens and upgrade your tier. So we have 5 different tiers, providing different utility levels for each tier. The highest tier, tier 5, gives you that extra 40% APR. And that APR is pegged to the dollar value of your investment. So it's not 40%, but if Donkey goes down in value, then you'll get less. No, it's pegged to the dollar value. So if the Dawn value goes down, you'll get more Dawn tokens to compensate that, and vice versa. And that's one of the things that we're doing. But again, we're trying to introduce more and more utilities to the tiers. So, for example, the insurance that I just spoke about is from tier 1 and above. And we have something very exciting, actually, that we're introducing in a few weeks, which is no liquidation leverage. And again, it's part of our effort to kind of bring that extra value to farming and to become that one-stop shop kind of experience. So no liquidation leverage means basically you'll be able to wrap your entire strategy into that one LP token, collateralize that, and take a loan based on that. And theoretically, you can do that a few times, right? If you put it back in Donkey, but we're not obligating to do that. You can take that liquidity outside of Donkey if you wish. And that's the first time this is being done actually in DeFi, because a strategy composes of different protocols, sometimes even different networks. By the way, the one I showed you before, Mediciv one, he bridges some tokens onto Phantom and Binance Smart Chain. He does everything there. And for the user, it's just a one-click experience. Yeah.
Okay, wait, I want to ask you a question. So I go onto the website, I see these ridiculous returns, 30,571%. Sounds like garbage to me. I click on it. It says it's a high risk, 30,571% return. What is that?
So first of all, when you see those types of percentages, and today specifically is a good day to talk about this, but when you see those types of percentages, read the small print, go into detail. Okay, no one's giving away 30,000% APY without risk, and you need to understand what's happening in that strategy. This specific strategy uses USDC to purchase a token called Klima, which is one of the DAO forks, which right now don't have a very well reputation, but at some point they did. And I'm assuming in the near future, their next version will have a good reputation as well. And that's why it's such a high APY. But again, you have to read the small print in there. If you go into it, if you click on it, it says specifically that this strategy is purchasing Klima, and you're exposed to the price of Klima. So the reason why the farmer used USDC in this case, if I remember correctly, was a liquidity issue to get the least slippage. So that's something that a farmer needs to think about all the time. How does he reduce slippage for his followers when they enter and when they exit, of course.
Okay, now last question. Is there a possibility or probability that the donkey, because there have been hacks in DeFi, and is there a possibility that donkey will be hacked and then all the money that's stored in all the donkey vaults will be gone?
So this is an advantage and a disadvantage, depends on how you look at it, but donkey itself doesn't use decentralized contracts when it comes to the user's funds. We're working together with Fireblocks, which is the #1 institutional, there we go, custodian service. So we're using their service in order to secure the user's funds. It also means that the farmers themselves don't have access to the money. They're just suggesting the strategies and indicating what we need to execute and when, how and when. So that's a humongous advantage. I want to say never, but never say never. We're doing everything we can every single day to increase the security of the users and to make sure that won't happen. And that's all I can say on that.
Brother, thank you so much. Amazing. Great to have you back.
Great to see you again. Thank you.
Great to see you, my friend. All right. So you see, you don't even need to become a DeFi farmer. You can just go and copy farm on Donkey. And that's not a shill for Donkey, but I do think that there are very few places that institutions can come and start following DeFi strategies. I think that Spool is a great example of that. I think that Donkey is a great example of that. I do think that this phenomena could be so big that it could actually take the markets down a little bit. And ARK says that stablecoins could slow down the growth of Bitcoin. And that is because if people think that the markets are going to be going sideways, then what they're going to do is they're going to take their money and put their money into stablecoins and actually become farmers. Because if you think that the market is going to continue to go down and Bitcoin is going to continue to go sideways, well, what do? You become a farmer. You become an expert in DeFi. You can become an expert in NFTs, or you can become an expert in DeFi. You can become an expert in DeFi pretty quickly. DeFi is not as complicated as it seems. And I mean, I think Root to Fi summarizes it pretty well. He says, look, first of all, you got to learn to set up wallets with different networks. If you don't know how to set up a wallet with different networks, you got no chance. Get a hardware wallet, learn to bridge funds between network and network. So learn to bridge funds between, say, Polygon and Ethereum, or Ethereum and Polygon, or Avalanche and Ethereum, because you're going to be moving money from one place to get returned to another place to get returned. Use burner wallets for new protocol and NFTs. In other words, what he's saying is use wallets, keep using different wallets for every transaction in case something happens. And then you just need to start learning things like impermanent loss and APYs and APRs. So we've got to start learning how to do this. And when you do start learning how to do this, there are a myriad of opportunities for you to make huge returns in crypto while you are waiting. The most basic of these returns is Anchor Protocol. You can put your money into Anchor Protocol right now, today. And yes, it is sitting in UST, and UST may lose its peg. But if you are putting your money into Anchor Protocol, you're earning 19.46% on your money. Now, which institution isn't going to come in and take 19.46% on their money? Everyone will do that. Everyone's going to come in and start getting these kind of things. There are also a whole lot of other strategies that you can do. And some of them involve impermanent loss. And that means that you're staking two tokens. You're staking two different tokens. And as the price moves, you get this phenomena called impermanent loss, which I'll explain to you in a different video. But Miles Deutscher, who may or may not be joining Banter soon, may or may not be doing a DeFi show in Banter soon, may or may not. He wrote an article on the Crypto Banter website, and the article it's called Volatility Proof Crypto Profits. And it says, during times of uncertainty, crypto still offers opportunities for great returns. Here's Miles Deutscher says 2 great strategies. And in these strategies, you can go and read this. He actually walks you through step by step, how you can earn 200% APY on UST and AVAX and 82% APY on Luna. And he literally, he breaks it down for you. Collateralize your Luna on Anchor Protocol, borrow step by step. If you don't want that kind of strategy, if you don't want the strategy where you can get impermanent loss, and remember, you can get impermanent loss on any strategy where you're staking 2 types of tokens, then you can have, here's another thread that he did, and this is on just staking stablecoins. He says, with so much macro uncertainty, stablecoin farming enables us to generate passive income while mitigating downside risk and waiting for the markets to recover. This increases our buying power when it comes to scoop up the dips. How do we do it? Well, Yearn Finance is the ultimate DeFi gateway, providing access to yield farming with some of the best risk-adjusted returns in crypto. It operates on ETH and Phantom, but I'll be focusing on Phantom vaults. And if you look at the Phantom vaults, you can see that on the Phantom vaults, you can be earning 12.37, 12.65%. And he says, Yearn is offering 16% APY on MIM and DAI, which basically are 2 stablecoins. And he walks you through step by step on how to do it. Connect your Phantom wallet, navigate to the vaults tab, click on deposits. Next to the DAI vault, click deposit, then deposit. And really, he takes you through it step by step. On Harmony One, 100 Finance is offering 31% on USDC and 29% on UST. And he walks you through step by step on how to do it. So that means that even while you're waiting for the markets to recover, you are making 30% on your stablecoins. Almost unheard of. Let me show you a strategy. And the strategy is on a protocol which lives on Avalanche. And the protocol is called Platypus Finance. It's basically like the curve of Avalanche. So it's a curve on Avalanche. And what Curve is, for those of you who don't know what Curve is a stable coin market, so to speak. It's where you can swap one stable coin for another stable coin. So MIM for DAI, USD for UST. If you want to swap your stable coins to jump networks, well, that's where you do it. If you go to Platypus Finance, and if you're going to go there, go to CoinGecko first, then click here, then click the link over here. Don't try and find it because you may go to a malicious link. Click on Platypus Finance, then you'll land up here. And it will say to you, okay, would you like to deposit? And you can deposit stable coins, USDT, USDC, and you can earn 24% and you can earn 18%. Or those are the base rates. But then what you can do is if you buy PTP, so if you go and buy PTP, which is the token here, and you stake PTP, there's this thing called the boost calculator. So you say, okay, if I want to deposit USD and I want to deposit $1,000, let's say I want to deposit $1,000 of USD, and I want to stake PTP, and I'll stake 100 PTP. Okay, so I'll stake 100 PTP. I think that's the one. Okay, so let's see. Yeah, okay, so let's take 100 PTP, and I lock it up for. It'll ask me how long do I want to lock it up for. So hold on a second. Let's just have a look here. Hold on a second. Let's just close that and start again. So let's get the boost calculator. Let's select the token. Let's say I want to stake USDT. I want to select 1,000 USDT, and I want to then stake 100 of those. And it should ask me how long I want to stake it for. Why is this not asking me how long I want to stake it for? But effectively what happens is you can boost your APY, and you can boost your APY for as much as it goes up to about 80% by just staking a little bit of PTP. Oh, there we go. Let's see if we can. There we go. Staking period. Let's say I stake for 2 months and I stake 100 PTP for $1,000. You see, what I've done is I've boosted my yield to 76.8. So just by buying PTP, staking PTP, and staking $1,000, I can earn 76.8% per year doing it. Okay, so that is another example of how you can make money in the down market while the markets are moving sideways. You can make money just by getting yield. And that's what we need to do. We need to be agile. We need to be able to adjust our strategy. That's what it's all about. Now, I want to look at the Crypto Banter website because I'm waiting for an article to come out before I talk about it. I don't know if you guys saw, but the Morning Brew was out today. Everything you needed to know was in the Morning Brew. That's Freddie's baby. Let's see. Is the time Wonderland story out here? Here it is. The time Wonderland story is now finally out. The juice is finally out. So, I mean, Daniele Sesta, who we love, is not having the best time. He's having a very poor time. He's having a very bad time. I don't know if you remember, but yesterday, poor guy woke up to this. What the fuck? What happened yesterday was, it's all explained in an article on cryptobanter.com, but they have a guaranteed buyback mechanism on time, which is supposed to buy back the tokens at the net asset value of the protocol. So they take the asset value of the protocol and they buy back the tokens at the net asset value of the protocol, until they didn't. And the bots started to attack it. And he thought it was a malicious attack. In fact, it was a malicious attack. And it destroyed the price of time. And you can see that in the charts. Let's look at the charts. So we'll look at the 7-day charts. I think it's the easiest way to look at it. So you can see that was the first decline and the price started to go down. Then they came up with a proposal to take Abracadabra money and merge Abracadabra money with Wonderland. So he heads up Wonderland, or he was one of the founders of Wonderland, and he was one of the founders of Abracadabra money. And they made a proposal to merge Abracadabra money with Wonderland. So basically to merge the two protocols. And it was a great proposal. And even though yesterday the time protocol got attacked, they decided to still bring out this proposal. And everyone commented on how amazing this proposal was. Jack Nevold wrote a whole thread about it. He spoke about this proposal. He gave the pros and cons of the proposal. And it seemed like it was going to be a great, great, great proposal. And then this morning, he wakes up again, and he wakes up to this. The price absolutely collapsing again from $544 earlier, right down to $342. And this is where the plot thickens. Because what happened was, I think he got Zachxbt'd. I think that Daniele Sesta got Zachxbt'd. Okay, now let me explain to you what I think happened. At 8:46 this morning, he publishes a post saying, today allegations about our team member 0xSifu will circulate. I want everyone to know that I was aware of this and decided that the past of an individual doesn't determine their future. Remember, this is 8:46. I choose to value the time we spent together without knowing his past more than anything. Many people in the world are judged by their early mistakes. This comes prevalent into the life of ex-inmates that can't get access to financial services after being felons. One of the reasons why blockchain technology and DeFi is so powerful is that it has no bias about your past. I have no bias about 0xSifu's past. He has become a friend and part of my family, and if my reputation of judgment will be hit by this dox, then be it. All frogs are equal. As I fight for him, I will fight for anyone else that has proven to me to be a good actor despite the past. I will keep looking forward into the future rather than crystallize back. Hope you do too. This is 8:46. And then at 8:47, he gets Zachxbt'd. So obviously what happened there was that Zachxbt told Daniele Sesta, look, I'm about to expose this. And what is this that Daniele Sesta was about to expose, or that Zachxbt was about to expose? This needs to be shared. 0xSifu is the co-founder of Quadriga X. Michael Patron, if you're unfamiliar with Quadriga X, it's the Canadian exchange that collapsed when the founder, Gerald Cotton, disappeared with $169 million. So what he said is that 0xSifu who is the CFO of Wonderland, is the co-founder of Quadriga X. And there are screenshots here on a conversation between Daniel Sesta and Zachxbt. And it said, I came across something rather odd about that. About Dubai? No, about Sifu. Or about Sifu. Oh, shit, what's up? Well, he's the Quadriga guy. I cannot confirm, but I've thought about this a lot. Dangerous to be working with, sir. Yes, but the problem is in the PR at the point Alex, my partner, told me, how are you going to manage this if it comes out? I don't have an answer. I can count on a single hand how many people know. We started this together without knowing. Is interesting, you know. Though he was very careful, I have my ways. So that's a discussion between Daniel Sesta, and I think it's a discussion between Daniel Sesta and XBT and Zachxbt. Prior to Quadriga, Michael helped run an identity theft ring called Shadow Crew, in which he later pled guilty. While Danny insists it's fine to put both his rep on the line, along with, most importantly, the money of the people who have deposited in the protocols at risk. Okay, so here we go. I feel it. I don't know what to do. I feel it. He's a good man. I spent a lot of time with him recently. Do you think I should get him out slowly out? But yes, it's my biggest, highest risk of my reputation. That's what my PR security manager told me. And he says, you're willing to put your entire rep on the line and also risk everyone's money? He says, no, I'm not. Well, that's what you're doing. That's what I think. I think the conversation is between him and Zachxbt. I would never have expected this any longer, but cannot sit on it any longer. And that's after the events of what happened to Time this week. So who is this guy? Well, the 0x Sifu is the co-founder of Quadriga X, and he has spent time in a US prison for his role in identity theft. And he was the CFO of Wonderland. So then the whole crypto community started to weigh in. Andre Cronje says, I still support Danny, still planning on working with him, but there are lines. A history of consistent fraud, theft, and malicious behavior isn't a mistake. That's intent. Having Sifu manage funds, especially user funds, can be argued is negligence. That's all I have. Danny knew for a month, and in that month, Sifu was handling funds. I don't know what psyops. I don't know what's going on. I want to get off Willy Wonka's magic carpet ride. Okay, so this is crazy shit's going down here. Miles Deutscher comes in and he says, look, fucking crazy. Full disclosure, I'm no longer holding Time either. Feeling for the holders right now. Really need some clarity from Daniel Sesta on the situation. Route to Fi says, I woke up. I saw the situation about Sifu. I can't be part of this anymore, and I'm selling my time at a loss. And here we go. That's when people started to sell their time at a loss. Okay, then we have more of the community jumping in. You've got, I feel obligated to disclose the following. I've sold approximately 70% of my spell today in the wake of Sifu's revelations. This is me being more cautious, calculating risk, diversifying my portfolio. As far as I know, Sifu is not related to Spell. I think MIM and Spell are one protocol, and Wonderland is something completely different. So that's something that we need to start looking at. Then I see this tweet over here from Suwoop, and she says, she was replying to Daniel Sesta, says, Daniel is involved with Bitfinex and Tether. Merlin from Abacadabra is Giancarlo, who's the CFO of Bitfinex. You read it here. You'll probably be deleted, but fuck it. Now that Sifu's identity is out there, I'm dropping alpha. Who knows if this is true? And then finally, we get a statement from Daniel Sesta. And the statement reads as follows. And I think he did the right thing. He says, Dear Frogs and crypto community, I would like to issue a statement due to the occurrings of the last 24 hours. To summarize what has happened, word came out that Sifu has been running the Wonderland Treasury, only Wonderland Treasury. Previously was a co-founder of Quadriga X and has other occurrences in the past. I found out about this a month ago. I'm going of the opinion of giving second chances, as I mentioned on Twitter. I've seen community very divided about my choice, maintaining him as treasury manager after finding out who he was and his past. Regardless of what has happened. Now, having taken some time to reflect, I've decided that he needs to step down till a vote for his confirmation is in place. Wonderland has the say who manages the treasury. It's not me or the rest of my Wonderland team. It's not easy to take these kind of choices. who know me and had the time to listen and follow my journey in DeFi can confirm I have no bias for anyone. I've learned to trust people and make my own opinions about them rather than just listen to the noise. This has led me to an incredible friendship and also to dramatic ends, including love stories and friendships. This said, I have to lead the community by example and make sure that everyone can voice their opinions and not just take mine as given. All funds in Wonderland are managed by multisig. Any FUD related to that needs to be cut off now. They are secured by me and the Wonderland team. Buyback will still happen, and team is working on deploying products that we have mentioned it would need to be deployed. I hope the community now comes together and decides what the future looks like and who they want managing their money. And remember, that whole story has now been broken on the Crypto Banter website. You can go and check it out. Sign in with Twitter. Leave us your comments. Let me know what you think. Now, I have a question for you guys. Do you judge a person based on their history, or do you give people second chances? I mean, does it mean that because someone's done something wrong once and they've gone to jail and they've served their time and they've come out now, does that mean that they can never ever get a job ever again? I don't know. I'd love to hear your opinion. I don't really have an opinion. I think Daniel Sesta did the right thing. I think he probably should have done something earlier, but I think he did the right thing. And to be honest, I can't believe I'm going to say this, but I actually think that while everyone is panicking about what's going on at Wonderland, I kind of have faith in Daniel Sesta to be able to pull a rabbit out of a hat. And to be honest, I think that he may actually get out of this. I don't know. You make your decision. I'll see you guys again tomorrow. Until then, remember to watch Hustle Show tonight, guys. Remember, Hustle Show, Big Alpha. It comes out in about 3.5 hours, 3 hours and 15 minutes. In this market, stick to the strategy. Start farming. Start playing play to earn. Start learning the play to earn tokens. Those are making a whole lot of money. In fact, Hustle made some calls last night. All those calls are up. Every single one of those calls is up. So I'll see you guys again tomorrow. Until then, trade well, my friends.
Oh, that time story is interesting.
The day of our lives.
Yeah.
It chronicles